Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 27th of September. We have a busy week ahead of us, which starts with US durable goods orders on Monday. On Tuesday, we should be on the lookout for Bank of Japan monetary policy meeting minutes and also US consumer confidence data. Going forward, Japanese retail trade and Eurozone consumer confidence figures will be closely watched in addition to the weekly crude oil inventories on Wednesday. On Thursday, key data releases are reserved for Chinese manufacturing PMI, UK GDP Q2 figures, Eurozone consumer price index, and also Eurozone unemployment rate for August, which is forecasted to stay unchanged at 7.6%. In the afternoon, pay attention to US and also Canada Q2 GDP figures in addition to the weekly US jobless claims data. The week will finish on Friday with Japan, UK, and also US manufacturing PMI figures. Now, let's take a look at few markets. Let's start with the DAX index. The recent price action appears to be an oversold bounce back into a key trading level, which is resistance in our case at 15,700. That area is not just the cluster of the previous lows and also these highs here, but it's also a fib retracement from swing highs all the way down to the current swing lows as well. A push higher and an end-of-day break above 15,700 resistance could open the way for a gradual move higher, targeting additional resistances towards 15,850, followed by 15,900, 15,940. Retest of that level from above as a newly found support could open the way for the extension to the upside, targeting additional resistance at 16,000 and higher. Alternatively, if we see a rally and a rejection or a gradual move lower and a loss of these current lows at 15,500, that could signal a possibility for a deeper corrective move to the downside, targeting additional support at 15,400, 15,360. Loss of that level could open the way for the retest of 15,200 and 15,100 once again. This is Nasdaq or US Tech Index. Yet again, the price is creating an oversold bounce back in something that can be described as a rising wedge in clearly defined downtrending markets, and the price is currently capped by this falling resistance trend line at the key trading level at 15,400. These type of patterns, they have the tendency to break to the downside and extend the move to the downside. So, as long as 15,400 resistance hold and this falling resistance trend line is intact, bears are in control, in particular if we see a gradual move lower and a loss of 15,230 level. Retest of that level from underneath could signal the possibility for the extension to the downside, potentially opening the way for a deeper corrective pullback, targeting additional support at 15,100, possibly 15,000 to the downside, followed by 14,850. Alternatively, if we see a rally and a breakout above 15,400, an end-of-day close above that level, that could trigger a short squeeze, potentially targeting additional resistances on the upside at 15,500, followed by 15,670 and higher. Bitcoin had a volatile couple of trading days in light of that recent Chinese announcements. I don't want to dwell too much into the fundamentals, but the key trading level going forward is at 44,320 to the upside. Push higher and an end-of-day close above that level could trigger a bullish reaction, extension to the upside, potentially targeting 46,380, followed by 49,300, and then obviously 50,000, which is a round number. possibly even higher, 51,370, 15,300 and 40 on the upside. Alternatively, if we see a rally and a rejection, or a gradual move lower and a dip below psychologically important 40,000 level, retest of that level from underneath could open the way for a gradual move lower, targeting additional supports around 36,400, possibly even 35,000 to the downside. Euro dollar appears to be downtrending. We have a significant US dollar strength at the moment and bullishness. The current price action is creating the sequence of lower highs. It's capped by falling resistance trend line, and it's also trading below multiple moving averages. Key trading level for euro dollar is at 1 spot 1750. Actually, it's a zone, 1 spot 1750, 1 spot 1765. So it's a zone of about 15 points here. Rallying to that level and a bearish rejection, or a gradual move lower and a loss of these current lows at 1 spot 1680 could open the way for the continuation of this selling pressure, targeting additional support at 1 spot 1650, possibly even 1 spot 16 to the downside. Alternatively, if we see a rally and a breakout above 1 spot 1760, an end of day close above that level, possibly a retest from above as a newly found support that could trigger a short squeeze, targeting additional resistance at 1 spot 18, 1 spot 1850, possibly even 1 spot 19 to the upside. Sterling dollar appears to be bearish, but a longer term picture is pointing to a coiling price action here, with a sequence of slightly lower highs and slightly higher lows, as long as this low here holds at 1 spot 36 to the downside. So that's a key trading level. Rally from here and a breakout above 1 spot 3750 could open the way for a push higher, targeting additional resistances at 1 spot 38, 1 spot 3850. Only the end of day close above 1 spot 3850 and a retest from above could open the way for the extension to the upside, targeting additional resistance at 1 spot 3950, 1 spot 40. Alternatively, if we see a rally and a rejection, or a gradual move lower and a loss of these lows here at 1 spot 36, that could trigger a bearish reaction, targeting additional downside supports at 1 spot 3550, followed by 1 spot 35. US dollar strength was clearly visible here in dollar yen. Dollar yen was ranging for a very long time, capped by 110.40, 110.50 level and supported by 109.50, 109.30 zones. Finally, we are seeing a push higher and an end of day close above that psychologically important 110.50. Pullback to that level and the retest of that level as a newly found support now, and a rally higher or a breakout above 110.80 could open the way for a gradual move higher, targeting additional resistance at 111, nice and round number, followed by 111.60, which is this swing high here from July 1st, 2nd of July of this year, followed by 112 to the upside. Alternatively, if you see a push lower, loss of 110.30 and a gradual move lower, the key support to the downside is at 110. Loss of that level could target 109.70, possibly even 109.30, therefore a continuation of this sideways move. Let's talk about gold now. Gold had a bearish reaction so far, but we are reaching some really important support zones down here towards 1740. The price is creating a double bottom. The price is actually downtrending, high, lower high, lower high. The price is capped by falling resistance trend line, but potentially there is a little bit of a divergence starting to form here, with stochastics pointing to slightly higher low and the price is creating the same low or slightly lower low. So there is It's not clear cut yet, but it's starting to form. So the key trading level to the downside is at 1740. Loss of that level would indicate bearish continuation targeting 1730. Loss of that level 1700 to the downside. Alternatively, if we see an oversold bounce back, upside is initially capped by 1770 to the upside, therefore retest of this falling resistance trend line. Only the end of day break above 1770 and a retest of that level from above could trigger a short squeeze, therefore trend reversal, targeting additional resistances at 1790, 1793, 1800, above that 1817, possibly even 1821 come in play. Let's talk about crude oil. Crude oil had a bullish continuation to the upside. Really nice and bullish. Higher lows, prices supported by rising trend line, prices trading above multiple rising moving averages. There's a bullish sentiment here. Key trading level going forward is at the previous resistance of $73 per barrel. Pullback to that level and a rally or continuation to the upside and break above 74.60 resistance. An end of day close above that level could open the way for the continuation to the upside, targeting additional resistances at 76.40 followed by 78 to the upside. Alternatively, if we see a corrective pullback, loss of 73, that could open the way for a gradual move lower, therefore a retest of this rising support trend line once again towards 72, 71.30. Only the end of day close below 71.30 and a retest of that level from underneath would change the bullish outlook, potentially opening the way for a deeper corrective pullback towards psychologically important $70 per barrel. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.